Alright folks, the struggle for global supremacy isn't simmering anymore. It's erupting, and every maneuver now feels like the first volleys of an economic conflict. For years, we've watched Beijing turn its industrial base into a weapon, saturating the globe with low-cost exports and locking nations into reliance. China's strategy has been straightforward yet brutally effective. Ship deflation abroad, undercut competitors, and transform its factories into instruments of political power. But the turmoil exploding in Argentina has opened a new pathway for Washington to push back, and in the halls of government, Scott Bessant is preparing to brandish America's most formidable instrument. Forget missiles and aircraft carriers. His tool is the US dollar, and the drama unfolding today could determine who dictates the rules of international finance for decades to come. Only a few days ago, Argentina's central bank was compelled to unload over $1 billion in a frantic attempt to prop up the collapsing peso. That kind of hemorrhaging doesn't just weaken Buenos Aires. It rattles confidence in the dollar itself. Because if Argentina falters, it's not merely another Latin American disaster. It's an invitation to Beijing. A single agreement with China could hand Buenos Aires access to renminbi swap lines, pulling the nation into Beijing's orbit. Remember, China already dominates Argentina's imports. It's the DB workshop of choice. If Argentina begins leaning on China's currency as well, Washington's dream of dollarization could die before it even materializes. For Bessant, that scenario is intolerable. Argentina's president came to office waving the banner of dollarization, promising to scrap the peso in favor of the greenback. But a deepening crisis could force him to abandon that vision entirely. That's why Bessant is moving with urgency. He's preparing to unleash the full might of the U.S. Treasury, even calling on the Federal Reserve if required. That arsenal includes swap arrangements, direct currency interventions, and massive purchases of Argentina's dollar-denominated debt. Each sounds technical, but the logic is simple. Inject enough dollars into Argentina's veins to stabilize the patient long enough for Washington to secure influence. Swap arrangements allow Argentina to temporarily hand over its worthless pesos in exchange for hard U.S. currency. Direct purchases would mean Washington literally scoops up pesos in exchange for dollars. No interest charges, just brute force market manipulation. And the effect was instant. In less than 2 days, Argentine stocks plunged 10%, but the moment talk of a U.S. rescue surfaced, markets rebounded over 8%. Investors don't even pretend anymore. They understand when Washington steps in, short-term damage vanishes, even if the long-term chains tighten. Call it exchanging one brand of flimsy paper for another, but at least the dollar brand still commands respect. Behind the lifeline, however, lies desperation. Washington doesn't give away favors for free, and Argentina will owe dearly. Financially, the move looks irrational. The peso has lost more than 99% of its value in the past decade. Global appetite for the currency is virtually zero. Argentina doesn't supply America with vital goods, meaning Washington gains no tangible advantage by holding pesos. Worse, if Buenos Aires takes swap lines, its debt will expand at rates above 4%, far beyond what the economy can sustain. Another default isn't just possible, it's highly probable. So why would Bessant throw good dollars after bad pesos? The answer is larger than Argentina. It's about the dollar's survival. Global demand for the greenback is collapsing, and the Treasury Secretary is scrambling to stem the tide. Tariff wars already wrecked America's trade position, but the capital markets are even more dangerous. According to Deutsche Bank, international investors are slashing their dollar holdings at record speed. The old routine, buy American assets, trust the dollar to hold steady, is dead. Today, nearly 80% of foreign money entering U.S. stocks is hedged. Investors still want American companies, but they want nothing to do with the currency. They buy equities with dollars while simultaneously betting against the greenback through futures and options. It's a schizophrenic market. Wall Street climbs while the currency that underpins it sinks. For Bessant, this is a nightmare spiral. As more investors hedge, the pressure on the dollar compounds. If the currency falls too far, demand for U.S. Treasury bonds, the backbone of Washington's borrowing machine, will evaporate. Yields would surge even as the Fed cuts rates. Imagine the paradox. Record highs on stock charts, but beneath the surface, the dollar unravels and government borrowing costs explode. That isn't mere instability, that's systemic breakdown. And in such a scenario, the wealthy insulated by their portfolios grow richer, while the working population, exposed to inflation and collapsing confidence in the dollar, pays the price. That's why Argentina matters. If Buenos Aires dollarizes, demand for U.S. currency spikes, new markets for bonds open, and Washington buys time to shore up its position. If it flips to Beijing, the renminbi plants a flag in the Americas, undermining the dollar's global dominance. On the surface, throwing money into Argentina looks irrational. On the chessboard of geopolitics, it becomes survival strategy. And beyond the financial battlefield lies another critical layer: resources. Argentina isn't just drowning in debt. It's rich in lithium and rare earth minerals, essential for electric vehicles, renewable technology, and advanced weaponry. China has been steadily locking down these reserves, securing supply lines for the industries of the future. Washington cannot afford to watch Beijing entrench itself further. So Bessant's rescue package isn't just about currency stabilization. It's about clawing open access to the raw materials America desperately needs. This is the larger reality. Argentina's financial collapse is not a localized crisis, but a theater in the global contest over money, resources, and power. The peso's implosion is a spark in a powder keg stretching from Buenos Aires to Wall Street to Beijing. And for Scott Bessant, every dollar deployed isn't about saving Argentina. It's about preventing a world where the dollar no longer reigns supreme. The stakes aren't counted in pesos. They're measured in who dictates the architecture of tomorrow's world order. Argentina has emerged as a critical player, located inside the Lithium Triangle with Bolivia and Chile, a zone that contains nearly half of the world's lithium deposits. Whoever dominates or exerts leverage here gains access to the fuel of the green future: batteries for electric cars, essential resources for semiconductors, and the raw leverage to shape tomorrow's economy. For Washington, Argentina represents a potential gateway. By extending monetary support, the U.S. hopes to eventually spark development of its own lithium projects and slash dependence on China's monopoly over rare earths. Yet the question remains, is this truly a golden highway for Argentina, or just another route leading to deeper reliance on American power disguised as assistance? While the U.S. struggles to defend its currency, Beijing is executing an entirely different strategy. China is dumping U.S. dollar assets and pivoting heavily into gold. Authorities have loosened import restrictions, unleashing a surge of bullion into the market. And it's not just the central bank hoarding, it's everyday citizens. Streets are crowded with buyers stacking bars, snapping up coins, and loading themselves with jewelry. Demand is surging across the nation. And here's the twist. The yuan has strengthened by nearly 3% against the dollar this year. Since gold is priced in dollars, every step upward in the yuan acts as a discount. A 3% gain equals a 3% markdown on Western gold, giving Beijing a massive edge. They are pulling supply out of London, draining COMEX, and sweeping Swiss inventories clean. From Beijing's vantage point, the plan is sharp and deliberate. Exit dollar bonds, expand within BRICS, reinforce domestic industries like semiconductors, and above all, protect wealth in gold. The People's Bank of China has been buying gold for nearly 12 months without pause, officially surpassing 300 tons in reserves. But experts insist the real number is far higher. Officially, gold accounts for 7% of their foreign holdings, but in truth, it could already be 30–40%. With the yuan strengthening, their purchasing power only grows. Trump's trade war hasn't just hurt the dollar. It has given China the opportunity to build a fortress of gold at discounted prices. And it doesn't stop with the state. Chinese corporations are going global to secure the supply chain itself. Why simply import when you can own the source? Zijin Mining is preparing a colossal $3.2 billion IPO, not in Wall Street, not in New York, but in Hong Kong. The deal is attracting heavyweights like Fidelity and BlackRock, eager to participate. Everyone knows China's appetite for gold is bottomless. The demand side is already guaranteed. But the supply story, that's where the real power lies. China already leads the world in production. In 2023, they mined 370 tons and last year boosted it to 380 tons. That outpaces Australia, Russia, and even the combined output of the US and Canada. And Zijin is only scaling higher. From 40 tons in 2020 to 70 tons last year, the company projects more than 110 tons annually by 2028. These aren't just domestic operations, they're global mines snapped up at bargain prices and folded into China's orbit. For now, London and New York still set the paper price of gold, but that illusion can't hold forever. Eventually, the physical supply will decide the real value, and the one controlling the metal will set the rules. China is following the same script it used with rare earths and renewable metals. Dominate the chain, starve competitors, and corner the market. Why? Because the dollar is unraveling. De-dollarization isn't on the horizon, it's already happening. More countries are racing into gold as faith in the dollar erodes. And when the rush reaches its peak, the real question will be, who controls the vaults? The answer will be Beijing. So now we have to ask, can Scott Bessant truly rescue a sinking dollar, or is China's golden master plan already unstoppable? Share your thoughts below. Stay alert, protect your wealth. Smash that like button and subscribe, because we are living through history, and gold is the weapon shaping it.